What is up, my Forex for Beginners family? Okay, today's lesson is going to be on Candlestick Patterns, Secret Revealed. So this is a very important lesson. Candlesticks actually tell us a lot about what price action is doing. And what is price action? Price action is the formations that the candlesticks form, and just like you're seeing on my chart right now, you can quickly just identify patterns and just mark them up on your chart. And as traders, what we do is we mark up the charts, and when there's multiple reasons to buy or sell, that's when we place a trade. But in order to know when to buy and sell, we have to do all the things that I've been teaching you. So every one of these lessons that we've had up until now, including this one, you really need to understand every tool or every skill that I'm teaching here, and then after we're going to put it all together, and the goal is to have multiple reasons to buy and sell, and candlestick patterns is just one reason to buy or sell. So as you can look on here, I quickly drew up a candlestick pattern here. This is a double top, so you can see it touched once here and it touched twice here, and then price shot down. And then here's another candlestick pattern. It's the bullish 3-pin pattern. So you can see that there's 1, 2, 3 pin formation, and then it goes up. And here, this is a bullish engulfing. You can see how, one second here, maybe I'll use a arrow. So you can see here that this green arrow right here engulfs that red candle to the left. And here again, I'll just go over. This is the double top. You can see how it came and touched once here and again here, and that's what makes it a double top, and then price shot down. And as you saw before you started this lesson, I've created a cheat sheet. And so what I want you to do is, we're going to go through the cheat sheet in a minute, but essentially why I'm showing this right now is I want you to work with the cheat sheet that I created for you, and then go back to your charts, and we're going to all focus on AUD USD. So right here, AUD USD. I want you to just do what I did here, mark up the charts, and use the cheat sheet that I provided you to try to look for formations and then mark them up on your charts. So right here again, I'll go into detail in the cheat sheet, but this is a bullish 3-pin formation. So you can see there's 1, 2, 3 pins here, and we're just up here, we're on the 4-hour chart. So I want you to go on the 4-hour chart on AUD USD, and I want you to just do what I did here, mark up what you see. And then this is another important one I want you to learn. I think I already went over this, but bullish engulfing. This is a pattern that I use all the time. So you see how this green candle engulfs the red candle to its left. That's what you call bullish engulfing. And again, the cheat sheet's going to explain this all in detail. And again, here is a double top formation. So you have it goes and touches this resistance line. It touches it once, drops down, comes back, retouches that area, and this is what we call a double top, and then price fell down. And then here, again, this is a 3-pin formation. So whenever there's a reversal happening, so price, when it's coming down and you start seeing this pin formation here, so 1, 2, 3 pins, that's telling you that price is most likely going to reverse and head back up. And look, you can see price headed back up to our original double top area. So let's keep going. And here you can see that I just wrote it's a failed breakout. So you can see here that we had a double top formation here, and then after a double top, which is a reversal pattern, we got price to drop down here. Then again, price made its way back up here, formed again a double top, touched once, touched again, and dropped back down. And then price again tried to make a third attempt. So you can see that price is really trying to get above this area, not once, not twice, and this is a third attempt, and it came up to the same area, dropped down, and then tried to, with a bunch of force, what we call is breakout. We were expecting it to maybe break out all the way up here, but what happened? It didn't break out. Instead, price fell back below quickly, formed another pattern here, which, where's my arrow? This pattern right here. Again, this is bearish engulfing. So this is bullish engulfing. Bullish means up, and I'm going to put that on my cheat sheet. Bullish means price is going to go up, or possibly buy. Buy, bullish means up, and then here bearish or sell means down. So bearish engulfing means, see this red candle right here? This red candle engulfs that green candle. You see that? That's what you call bearish engulfing. And then bullish engulfing is just the other way. See how this green candle engulfs, like its body engulfs this candle right here? That's what you call bullish engulfing. And so these are some of my favorite patterns: the double top, looking for a failed breakout, and then bearish and bullish engulfing, as well as these 3 pin formations. I use this all the time, and look how many times this has happened. So this is, we're looking at the 4-hour time chart here, and then every candle is a 4-hour time window. And I'm going to go over, I'm going to break down a single candlestick in a minute here, but I just want you to see how, this took me about 10 minutes to mark up, but look how much information by just drawing in the double tops here, or drawing in the bearish engulfing, or the bullish 3-pin formation. Like when you draw these things in, it in your head, you start seeing how the market's moving. And when you combined candlestick patterns with all the other things I've taught you, we're no longer, unsure which way price is going. What we do is we make a calculated decision based on all of these factors, all the things we've learned, when to buy and sell. So this is just another example of candlestick patterns, another tool that we use to decide when to buy and sell. And then this is another pattern here. And in my cheat sheet, we're going to go over it as a symmetrical triangle. So this can actually, price can do a couple things here. Let me just get my arrow here. So price could actually, see how price comes down here and it's bouncing between this, what we call a symmetrical triangle. The price does this all the time, and once you start realizing this, it gets really fun and amazing to watch, because look, price came here, bounced there, came up here, bounced here, came up here, bounced there, came up here, and it's still doing that. All I had to do was, I used my, we've learned in previous chapters, I'm looking down here, this is my trend tool. All I did was, draw trend lines. And you should have practiced this already and know how to draw trend lines. So all I did was come here, and you know what? I taught how to draw trend lines. I made sure it touched this line here, and then I moved this and just made sure this was touching here. And I did the same thing here and made it touch here, and there you go. And what's really interesting now is this pattern, and you'll learn in my cheat sheet here, symmetrical triangle, price can actually jump up this way, or it'll do the opposite direction. So this is a type of pattern where we wait to see what happens, and then we can join the trend, whether it's going up or down. But this is my cheat sheet's going to show you pretty easily how to identify these patterns, and then just figure out which way price is going to go. Sometimes price, we won't know. Sometimes it'll go up or down, or in this case, a bearish engulfing. When we see this pattern, bearish engulfing means price will continue down. And 1 second, I'm going to grab my arrow tool. And then here, when you see the bullish 3-pin formation, this formation is telling us that price is going to go back up, and look what happens. And then let's keep going. Double top, we identify double top. Double top is a reversal formation. Look what's happened, price went down. So you know what, once you start seeing these patterns on your chart, trading, it actually becomes easy and really fun to learn. So this is, this is what I want you to do. I want you to treat each lesson like it's an important tool you need to absolutely learn. Maybe you've learned about candlesticks in the past or the other topics I've covered, but the thing is, everyone teaches and everyone does this analysis just slightly different. And I've had a lot of experience in my life, and I've taken, like you've known, I've taken a lot of courses. I actually bought 13 courses and absorbed a lot of information, so that's why I know what I'm doing. And I'm teaching you guys 100% free. A lot of you, some people go to Facebook chat groups and just ask random people for help. Stop asking random people for help. I have volunteered to give you all the information I've collected over the last 10 years, and I'm going to give it to you in a fast-paced course, and you're going to be able to understand what I'm telling you very quickly and learn how to trade faster than ever before. Anyway, so back here. So here, there was a failed breakout, and we saw a bearish engulfing pattern, and price continued down. So this is not surprising to me. So what I want you guys to do is do the same thing. Go to AUD USD, and I want you to go to the 4-hour time frame, and then use your little toolbar here, and you should have the trend line tool. You should have the ellipse tool, so to draw these circles. All you do is do this. I want you to do this. Draw this on your chart so you can also identify, and like once you're drawing these on your charts, it's easier for you to just picture it in your head even when you don't draw it on. But right now it's all new to you, so I need you to just draw them on your charts and really identify what you're seeing, like I did in this chart here. I drew this all, and I wrote out these notations just so you guys could see what I see in my head now, because I've been doing this so long, and you will reach that point. But right now I want you every chapter just to go over the lesson, write these notes in, draw these circles, and if you haven't already favored it, all these little tools, I've already went in the previous chapter, but all of these tools, if you're missing some sort of tool here, if you don't have this this elliptical tool right here, you can just go in this column here, and they're all hidden here. If you just hit the arrow and then you just hit the favorite button, so hit the favorite and it shows up in your toolbar, and you guys should already know how to do this. But if you don't, just go back over the previous lessons. So as you can see here, it's pretty easy once you identify the candlestick patterns. And now I'm going to look at the cheat sheet I created for you, and there's many cheat sheets online. However, I custom made you guys this cheat sheet because I use double tops, the bullish 3-pin formations, and bullish and bearish engulfing. Like everything you see here, I use these patterns often because I see them so often in the market. So I'm going to quickly go over the cheat sheet, and then I want you to go over the cheat sheet again, and then on your own TradingView charts, I want you to mark up your charts like I did here, and then I want you to start posting your charts in either the student group. If you've finished all the free training, you get free access to our members, a student members group. So I encourage everyone to take this opportunity seriously, finish all the training, and then you can join our students group. And we only use TradingView. We mark up the charts, and then we post our chart markups, and we discuss the markups as a group. And that's what I want to create. I want to create this group of these traders who are just like amazing on the charts, and I want us to all share our charts together, and we'll do great together. We'll see the charts the same, we'll discuss the charts, and we'll make a lot of money together, and that's my goal. And okay, so now we're going to look at the cheat sheet. Before I actually look at the cheat sheet, I forgot, I want to first actually make sure everyone understands the candlestick. So this is a breakdown of the a one daily candlestick. So I'm going to actually change this chart here to, I'm up here, so I'm going to change it to daily. So I'm just going to hit reset chart, and what I want you to make sure you guys know this, and you should know this, and if you don't, it's okay. Listen up now. So because I switched to the daily time frame, that means each one of these candles is one day. This is another day. This one right here, another day. This is another day. So this means that, and one day has 24 hours, right? Everyone knows this. So for before this next candle forms, this is telling us that because we're on the daily chart, this one candle here took one entire day, so 24 hours to form, and then the next candle starts. And again, it starts at 0-100 hours, and it takes 24 hours before the next candle forms. And then this column on the right here is the price, and this column on the bottom is time. So let me just bring that little note that I created. So again, so right here, this one candle right here represents each one of these candles, and it's one daily candle, which equals 24 hours. And because we're on the daily chart, so let's just quickly break down what forms a candlestick. So this is a daily candle, just like this candle right here. And so here's the time. This column here is time. So because this one candle is a daily candle, it starts at 0-100 hours, and it doesn't close until 24 hours have passed. So again, let's look at the this column here. So this is time and this is price. So this column here is time, this is price. So let's look at the actual body. So this is what we call the body of the candlestick, the part that's square. So this is the body, and these guys right here are the wicks, and that's why I labeled it wicks. So let's start with the wicks. So what does the wicks tell us? So right here, see the top of the wick? Let's see what it says. It says the highest price for the day. So that means within the 24-hour period, 24-hour periods, because it's 1 hour candle. So this wick is telling us that the highest price of the day over here, so we're going to go to the right side, was $2. So within this 24-hour period, the highest price was $2. And then let's look at the other wick. And this is telling us within the 24 hours, because it's a daily candle, this wick is telling us the lowest price for the day, which was what? 80 cents. And then let's look at the body now again. So we looked at the wicks, now we're going to look at the body. So the body has this lower portion, and it says opening price. So when did this candle open? Because it's a daily candle, it opened at 0-100 hours. So at the open of this candle, the price was $1. You understand that? And then here, 24-hour close. So the top of the body represents closing price. So when it hit the 24-hour mark at closing, the price was $1.80. So this is all the information that this candle tells us. So let's just review again. So this body is telling us that when this candle started and when it opened, the opening price was $1. And then during the day, the lowest price it dropped to was 80 cents. And then during the day, it rose up, and the highest price it went to was $2. And then as we approached the 24-hour closing time, price was $1.80. So I really want you to understand the candlestick and what it's telling you, because when you understand what the candlestick is telling us and then combine that with candlestick formations, it really becomes powerful. So I'm gonna go back to the 4-hour time frame. I'm just gonna hit reset chart. So again, now that I'm on the 4-hour time frame, the same concept applies. The same concept applies, but instead of each candle being a daily candle, because we are on now the 4-hour time frame, every candle represents 4 hours. So we'll look at this. Let me get the arrow. So you see how this is a bearish engulfing pattern, and because we're on the 4-hour time frame, it's showing us that, see, when it opened, price was over here about, it was about 0.697, and then when it closed, it was at 0.694. So whether you're looking at the daily candle or the 4-hour candle in this case, it's telling us the same information. So I want you to, I have this on the cheat sheet as well. I really want you to just go over this and really understand what each candle is telling me or telling us, because as you go on the higher time frame, so if I go to the daily time frame right here, so when we actually look at the daily time frame, it's telling us a lot of information. You know, when we factor in this. So from now on, when you look at a candlestick, I want you to just really break down what it's telling you here, because when we have a formation like, when we have a formation like this, so see this red candle, it's telling us that the price was going up, and then during the next 24 hours, price just got hammered down. So this is telling us that sellers came into the market and hammered price down. And unless you understand, unless you understand this concept, you're going to be missing out on a lot of information. Candlesticks were created for a reason, and they're created because the data within the candle, all of this data tells us a story. It tells us a story, you know, telling us a story that price was coming up, and it was, see how this candle, the open and close, this green candle, the open and close is quite small. That's telling us momentum for upwards. Momentum is slowing down. And then when we get this big candle that gets smashed down, that's showing us that in one day, so many sellers came in to hammer the market down, and then later it came back up to retest. But that's another story. But I just want you to really focus on what these candlesticks are telling us, because they tell us so much information. And that's why every lesson I want you to treat like it's key information. Every one of our lessons, we need to understand the concept, because every lesson and every skill we learn is very important. And then when we learn all the basics, then we're going to put them all together. And you know, in this example here, we will be looking for 3 reasons of what we've learned. Not just the candlestick formations like support and resistance, or exponential moving averages, or break of structure. All of these are reasons we look for it to possibly sell. So that's what I want you to focus on. And let's now quickly just look at the candlestick patterns. You can on the website just click download cheat sheet, and you should get something that looks like this. So I've written over here on the top right here, just what we already went over is just a reference here. I also want you to know is some terms here. Bullish means up or buy, and bulls, it's about the bulls versus the bears. The bulls want to go up in price, and the bears want to go down in price. So bearish or bear, it means down or sell. So bullish, up or buy. Bearish means down and sell. So that's just some terms. So when I say bullish engulfing, that means it's a candlestick pattern that's gonna it's going to be bullish or upwards. So bullish engulfing, you usually buy on those patterns. Anyways, okay, so up here I've created this column here, and this is the actual candlestick pattern, and then this next column is the name of the pattern, and it forms during. So I put uptrend. So this is a reversal. Here is type of signal. So this is a reversal. Next move is down. So this is how you use it, the chart. So candlestick pattern, this is a double top. So you can see 1 top, 2 top, and it's forming an uptrend. So price was coming up, 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 got 1 top, came back down to this neckline, came back up, formed another top, and then got hammered down. And also see how this blue little line here and this blue line here. So how this pattern works is Normally how high the neckline is, from the neckline to the top, is about the same distance it's going to drop. So this is a double top, it forms in an uptrend, it's a reversal pattern, and the next move is down. And so here I just kind of drew out how to trade. So double top, and when we suspect it's going to go down, we can place a sell order here. This will be our target, and you can put a stop loss there. And I'll go more into how to trade these patterns, but right now I just want you to identify right here, identify these patterns on your charts. I want you to mark them up, and then I want you to post them in the student group. Okay, so let's continue downwards. So that's the double top. So this guy here, next one is the double bottom. So double bottom, so same thing, you know, there's one bottom here and then another bottom here, and you can draw this line which we call the neckline, and the distance between here is what the next distance, the breakout distance. So it's a reversal pattern. So this is the pattern, it's called a double top. It forms in a downtrend. So you can see price was coming down, 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 hit one bottom. This could have been around, say it's support. So it had one bottom, came back up, had another bottom, and then price shot up. And that's what's a double bottom. So it forms in a downtrend, it's a reversal signal, and the next move was up. And look, you can see price went up. And this is how you would trade it. Double bottom, it's a reversal pattern, and the next move is up. That would be your target. This is where you could place a buy order, and this is where your stop loss would be. Okay, so the next pattern is a head and shoulders. So you can see that, you know, a line was drawn here that they call the neckline, and it's pretty easy to identify the head and shoulders because it's got one top that they call the head, and then it's got these two shoulders, and then the distance from the neckline to the head is where price will most likely drop the same distance. So this is a head and shoulders pattern. It was formed during an uptrend. So you can see price is going up, 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 formed a shoulder, came back down, formed a head, came back down, formed a shoulder, and then dropped down. So this is formed in an uptrend. It's a reversal signal, and the next move is down, down. And then here, this is how to trade. Once you see a shoulder, a head, a shoulder forming, you can place a sell order here and put a stop loss here. But again, we're going to talk about entering later. What I want you to do right now is, after this lesson, watch it again, and then go back, use this cheat sheet, and just try to find these patterns and mark them up on the charts. That's what all I want you to do, is find these patterns and mark them up. Okay, so head and shoulders. The next one is inverse head and shoulders. So this is exactly what a head and shoulders is. So this is a head and shoulders right here. Inverse head and shoulders is just this, but on the bottom. So this is formed, you know, shoulder, shoulder, head here. This is formed during a downtrend. So price was coming down, 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 hit this bottom. It formed a shoulder, came back up, came back a little lower, formed a head, came back up, formed a shoulder, and then the next move was up. So this formed during a downtrend. It's a reversal signal or pattern, reversal pattern, and the next move is up. Next move is up. And this is how you could trade it. So you see the pattern form, you predict that the price is going to go up. You can enter your buy order here and set a stop loss. Okay. And the next one is a rising wedge. So this pattern here, and you're going to be able to identify these patterns, is the more chart time you have, all you got to do is see how this trend line here, all you got to do is see this point here, see this point here. You just have to get in the habit of drawing trend lines and seeing where price comes up and touches, and that's how you identify the pattern. So it just starts with drawing trend lines. So on your charts, just start drawing this trend line, and this is what a rising wedge looks like. So it forms during a downtrend. So you can see prices coming down, and then it starts forming this rising, what they call a rising wedge. So it keeps bouncing between this rising wedge, and then this is a continuation pattern. So that means price will continue in the same direction. So since we're in a downtrend, price started forming a wedge and then broke out down and continued its down, and its next move was down, and that's what a rising wedge is. And here's how you trade it. So you see price is starting to form a rising wedge. You can place your a sell order here, stop loss above the rising wedge, and then your target would be somewhere lower. And like I taught before, we can use fibs to figure out our targets, but again, we'll talk about that later. Right now, I just want you identifying these patterns on the charts. Okay, so this is also a rising wedge, but it is a reversal pattern. So the last one was a continuation. So price was coming down, it started a rising wedge, and then it continued downwards. This is a downwards continuation. And this one here, this rising wedge, is a reversal pattern. So you can see price was coming up, 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 started forming a wedge, and then it broke down and the next move was down. So this is how you trade a rising wedge, just like that. And then the next one is falling wedge. Okay, so a falling wedge is formed during an uptrend. So price is coming up, 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 and then it starts forming this falling wedge. So just draw your trend lines in, identify that it looks starting to look like a falling wedge, and this forms an uptrend. So you can see price is coming up, started forming the falling wedge, and it's a continuation pattern. That means the next move is up. So, and then price accelerated upwards. And here's how you can trade it. So it's a falling wedge. So that means this wedge is going downwards. That's what makes it falling. Drawing your trend lines, and then the next move is going to be up, continuation, because price was coming up, and this is a continuation. And you can place a buy order and with a stop loss there. Okay, and the next one is a falling wedge in a downtrend. So price is falling, 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 and it starts forming this wedge. This is a reversal pattern. The next move is up, and price accelerated upwards. And this is how you can trade a falling wedge in a downtrend. So just like this, and then you can place your stop here with the entry, a buy order here, and trade it up. But again, we're just identifying these on a chart right now. Don't worry about trading them. Just try to look for these patterns. That's the goal. And then once you identify these patterns, you can just kind of follow this flow chart. You can say, okay, I see this on the charts. It's called a bearish triangle. It forms during a downtrend. So here it's a downtrend. It's a bearish rectangle. So all you do is draw in a rectangle. And when price gets stuck in here, because it looks like it's forming a bearish triangle, which is a continuation pattern, and that means the next move is down. We could have placed a sell order, and look what happened. Price fell down. So same thing here. You can place your stop loss here, place your entry here, and that will be your target. So that's how you trade it. The next pattern is a bullish triangle. Bullish rectangle. So what price is doing, it's happening in an uptrend. So price is coming up, up, up. It starts forming this bullish triangle, and then because this is a continuation pattern, the next move we're predicting is going to be up, and price accelerates upwards. And this is how you would trade it. It would come from an uptrend, get stuck in a bullish rectangle, and then price would accelerate upwards, and this is how you place your stop and entry and target. The next one is, oh, did I skip one? Hold on. Oh, the next one is Bearish Pennant. So this forms during a downtrend. So you can see, it's trending downwards, and then it starts forming this, what they call a Bearish Pennant. And after that, this is a continuation pattern. The next move is going to be down, and price fell down. And this is how we trade it. You set your stop above here, your entry here, and your target here. So again, don't worry about trading it, just mark it up on your charts. And the main thing is identifying the patterns. Okay, this next one is a bullish pennant, and this forms during an uptrend. So you can see prices coming up, comes to this point and starts getting trapped in what we call a bullish pennant. And the next move we're predicting is up. So this forms an uptrend, it's a continuation pattern, and the next move was up. So again, same thing, stop loss here, entry here, target up there. Okay, the next one is Symmetrical Triangle. So this I highlighted in blue here. So this is actually a continuation or reversal. So that means it can go in both directions. So we would wait for price to show us what direction before we start jumping on the trend. So a symmetrical triangle, this happens often. And I already showed you on the very beginning, it was a symmetrical triangle. So all you have to do is on your charts, draw this trend line. I see price getting narrow. See how it's getting narrower in this little triangle? Well, that's easy to identify by just drawing some trend lines. Boom, 2 trend lines, all of a sudden you're at a symmetrical triangle, and this forms during an uptrend or downtrend, and it's a continuation or reversal. So we don't exactly know if the next move is going to be up or down, but this is what it looks like here. So this happens often, that price is trying to figure out whether it wants to go up or down. And I've watched this many times with Bitcoin. There's usually a big explosion, either down or up. Usually it's in the same direction as the trend. So I love this pattern here. Again, just practice marking it up on your charts. Next one here is a descending triangle. So basically it forms during a downtrend, and then it starts getting stuck in this little descending triangle. This could be a continuation or reversal formation. We don't know if it's going to go up or down. So that's why this target here, it could either be a buy or a sell. We would wait for it to break out, maybe retrace and retest one of these levels before we enter. I'm going to teach you guys, we always look for a retest before we do an entry, because in these kind of situations we don't want to guess which way price is going to move. What we're going to do is wait for price to either break out up or down, and then have a pullback, which we use Fibonacci retracement, and then join the trend using Fibonacci retracement, have an entry using fibs. So this would be a certain time, or even the symmetrical triangle, when I would use Fibonacci to join the trend. And again, we're going to talk about how to trade that later. I'm going to teach you a strategy to just practice. But right now we're just learning the key steps, and the step we're talking about today is candlestick patterns. Okay, so ascending triangle. So this happens during an uptrend. So price is coming up, and then it starts getting trapped in this ascending triangle. And this is either a continuation or reversal pattern. It can form an up or down trend, or the next move is going to be an up or down. So again, we would wait for it to break out either down or up before we enter, like I talked about using fibs. But anyways, I just want you to identify these patterns on your chart, mark them up, and then see what happens. See how price goes. And once you start marking these up, you're just going to be noticing these patterns happen over and over again, and you're just going to be able to read the charts without marking them up. But we will always mark them up. But I'm just saying, once you start learning all these key skills, your brain starts just functioning differently. It starts just being able to see all these patterns and things that are happening without because you've done it so many times. So that's why I keep telling you guys every lesson, I want you to practice, mark up the charts, and then post your charts in the student group. If you've completed the training, you're going to be awarded by entrance into the private student group, and I want you guys to mark up the charts and post them so we can discuss them. Okay, let's go back to this. Okay, so the next one I'm going to talk about are one of the most important patterns that I usually look for reversals. This first one we're talking about, I look for this often, and it's, let me show you really quick here. So this is this 3-pin bullish formations, 3-pin bullish formation. So that's this guy here. So what happens is when price is coming, so it's coming from above and it's coming down, 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 and then I see this, see that wick there? That's what they're calling a pin. So that's pin 1, pin 2, pin 3. Oops, I didn't want to do that. So pin 3. So this is called the 3-pin formation. So what is this telling you? This is telling you that, see, that's why I told you we really need to, I'm going to bring this back here, because by looking at, by knowing all this information here, we can look at this candle and see that that price shot down all the way down here and then got hammered back up, and then it tried to go a little higher and it came back here. So during this candle, the open and close, there's not a big difference in price, but there is a long wick. So this is showing that price was coming down, and once it reached this level, buyers rushed in and hammered the price up. So unless you know what this is showing us, the open, the close price, the lowest price of the day, or the highest price of the day, this is actually telling us that, you know, sellers came in to try to push it lower and got hammered by the buyers. Buyers just forced the price up. So this is the 3-pin formation that I want you guys to look for. So this is an example happening in a downtrend. So price is coming down, down, down. This is a reversal formation. The next move is up. So what happened? Price was coming down, 1, 2, 3-pin formation, and the next move up, and then price moved up. So here, 1, 2, 3, price moved up. Again, another example, pin 1, 2, 3, price went up. Pretty simple once you start just memorizing these patterns, and you don't even have to memorize it. Just use this cheat sheet and eventually you'll just see them. You'll naturally see them. Okay, so this next one is, so this was a bullish, and like I told you, bull means up, and bear or bearish means down. So this is a bearish 3-pin. So this forms during an uptrend. So price was coming up, 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 and this is a reversal pattern. So the next reversal pattern, the next move is down. So 1, 2, 3, 3-pin formation, and what happened? Price went down. So here's over here now, price is coming up, 1, 2, 3-pin formation, price got hammered down. 1, 2, 3 formation, pin formation, price got hammered down. So that's it for the bearish, and these two are one of my favorites. And then I'm just going to end this cheat sheet off with my very favorite patterns. And this is, I want you to really understand this concept, because when I get to the lesson where I'm going to teach you my winning strategy, all these steps that I've been teaching you is for one goal. I'm not just giving you random information. I'm teaching you specific steps on how we're going to accomplish the trading strategy. I'm going to teach you a winning trading strategy, and it all starts with learning all these individual lessons. So this is a very important pattern I want you to recognize and remember, because this is going to be part of our strategy that I'm going to give to you very, very soon. Okay, so this pattern is called bullish engulfing. Again, bull means to buy or upwards movement. So this bullish engulfing is formed during a downtrend. So price was coming down, 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 down. This is a reversal pattern. The next move is up. So what is a bullish engulfing? So see how this green candle right here, see how I drew this black line here and this other black line here. So this green candle, which is a bullish candle, it engulfs. That means the body of it entirely is larger. See how the black lines here, which is the body of this green candle, engulfs, like it totally covers this candle to the left. That's what you call bullish engulfing. This candle engulfs this candle to the left. And that's telling you that, again, why I'm going to go back to this. Why we need to know this, because this was the open price and this was the close price. So look, when price was coming down, when this candle opened, price was here, and when it closed, price was here. So that's telling you buyers came in and hammered the price up. So buyers came in from here and hammered the price up, and it engulfed. See how this engulfed this candle completely? That's telling you that so many buyers came in that it just completely took out the sellers. The amount of sellers is way smaller than the amount of buyers in the market now, because this candle, this bullish engulfing candle, is engulfing this. And what happened? Price went up. So again, bullish engulfing happens in a downtrend, so price coming down. It's a reversal pattern. The next move is up. This candle engulfed this candle to the left, bullish engulfing, and now I'm over here. This is how it happens on the chart. So price is coming down. It hits a level of support. This candle, this green candle, engulfs. See, the body engulfs this candle, and the next move is up. See, price went up there. So this is one of my favorite reversal patterns is the bullish engulfing. And then the opposite of bullish engulfing, again, bearish engulfing means down or sell. It's just the opposite. So it forms during an uptrend. Price was coming up, 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 came to a level of resistance. And then the next candle, the sellers came in and hammered. See how it just got hammered down? And see how this body, see these two black lines? The body of this red candle engulfs this green candle. And this happens during a uptrend. So price was coming up, reached a level of resistance, and then got hammered down, and price continued down. That's what a bearish engulfing is. It's a reversal pattern. The next move was down. So again, here, looking over here, price is coming up. It reached a level of resistance. When price reaches the top, it's called resistance. When price comes down here, this is what you call support. So just make sure you know that. This is support. When price is coming down, support is like the ground. It's hitting the ground. When price is going up, it hits resistance like air. Air is resistance. So just remember that. So price was coming up. It hit resistance. It formed a bearish engulfing. This candle engulfed the candle to the left, and then price shot down. So those are my most favorite candlestick patterns. I'm really excited about you guys to mark up the charts and find all these patterns. I want you to get really familiar with all these patterns. I want you guys to post in the student group. I want to see your chart like this. One thing about once you get familiar with the charts, you start wanting your charts to look good. Like that's why today I wanted to explain this to you, and I was like, I really want this chart to pop, because it's about making your charts look not cluttered. We want to have just specific key information on our charts. You can change the color. Like here, you can just right click and go to color theme. I was using a lighter color in my previous lessons, but I wanted to change it up for you guys. I was like, you know what? I want to use a dark theme. So this is just one of the benefits of TradingView, and it's about making your charts look not cluttered, but look like beautiful to look at. And when your charts are nice and clean and beautiful, then it makes it easy to learn when to buy and sell. And when we master buying and selling, we make a lot of money. And the best thing about this is you've been able to learn all of this 100% free on a demo account. I'm going to teach you all your core skills, and then the next few lessons I'm going to actually teach you a winning strategy, and you're going to practice that, and then all of a sudden you're going to be this expert at chart analysis. You're going to have a go-to pattern to look for. You'll have a set rules and strategy to follow, and those will be the only trades you take. And you're going to be a successful trader as long as you stay disciplined and follow the rules that I set for you. And just know that I'm doing this 100% free for you guys because I want to give back. I want you guys to learn the basics, and then after you learn the basics, it's just going to be about you and the charts. And after that, you can learn whatever you want to learn to, you know, just add to your tool belt of tools to use on the charts. And you won't need anyone else's help. You won't be looking or reading all of these spam posts about signals or account managers. You're not going to need any of that. It's going to be you and the charts and no one else. And I can't wait until you reach that moment. And I still remember when I reached that moment, and it was a beautiful day. And it's been beautiful ever since. I'm really proud that you guys are part of this family, and I'm looking forward to see how far you guys can go. Thanks for watching, and I'll talk to you soon.